welcome to the weekly market recap with SC Securities. Let's take a look at some of the latest developments in the Sri Lankan economy and financial markets. Sri Lanka is set to host the highly anticipated Invest Sri Lanka Capital Market Investor Forum 2025 on March 27th and 28th in Colombo. Organized by the Colombo Stock Exchange, this major event aims to attract foreign investors by showcasing the country's growing potential as a vibrant investment hub. The forum will bring together key decision makers, including representatives from top listed companies, stockbrokers, local and international institutional investors, and industry leaders. The goal is to foster meaningful partnerships and highlight Sri Lanka's economic recovery. With the economy showing strong signs of revival, the stock market has also been on an upward trend. The all-share price index and S&P/SL 20 index delivered positive returns of 25.7% and 16% in 2023 respectively. In 2024, the ASPI surged by nearly 60%, while the S&P/SL 20 rose by 58.4%, with the trend continuing into 2025. Additionally, Sri Lanka recorded a net foreign inflow of $66.5 million in 2024, a significant turnaround alongside the highest ever capital raised in a single year, reaching $568 million. The government's economic policies, commitment to reducing state expenditure, and ongoing debt restructuring efforts under the IMF program have been key in boosting investor confidence. With renewed political and economic stability, Sri Lanka's capital market is being positioned as an attractive destination for global investors. Sri Lanka's banking sector has seen a steady rise in loan demand and lending activity during the final quarter of 2024. According to the latest report from the central bank, this upward trend is expected to continue into the first quarter of 2025. The increase in lending has been attributed to economic stabilization, steady interest rates, improved liquidity, and greater political stability. The central bank anticipates that lending will rise further in the coming months, backed by expectations of an economic revival. Looking at the broader credit landscape, Sri Lanka has witnessed cycles of sharp credit growth and contractions over the years. When monetary stability emerges following a crisis, lower interest rates tend to drive credit expansion. However, excessive money printing to fuel private credit growth has historically led to currency depreciation and external pressures. The central bank now reports that non-performing loans are on the decline. This is largely due to flexible repayment options, lower interest rates, and improved cash flows. The trend is expected to continue into early 2025, further supported by favorable economic conditions. However, Sri Lanka's monetary policy still remains under scrutiny. Sri Lanka's economic recovery is gaining momentum, with President Anurakumara Dissanayake announcing that at least 87 foreign-funded projects have resumed after being halted due to the country's financial crisis. This follows the government's recent declaration that Sri Lanka is no longer in a state of bankruptcy. Speaking at the 26th anniversary of the Chamber of Young Lankan Entrepreneurs, the president highlighted that 11 major projects previously suspended by the Japanese government are now back on track, along with 76 projects that had been put on hold by other Chinese investors. A key development in this sector is the construction of a 50-megawatt wind power plant in Mannar, which is expected to support the country's transition to sustainable energy sources. Additionally, the president underscored the government's commitment to economic policies that foster a stable business environment. He reassured investors that a business-friendly budget has been introduced to prevent major economic shocks and create a sustainable financial framework. Meanwhile, Sri Lanka recently received the fourth tranche of its 48-month, $3 billion loan from the International Monetary Fund, amounting to $334 million. The president acknowledged that certain policy decisions have been aligned with the IMF recommendations, ensuring they do not disrupt the stability of the economy or place excessive pressure on the public. Standard Chartered Bank has expressed optimism about Sri Lanka's economic outlook, highlighting increased confidence among international investors. While foreign direct investments remain a long-term goal, portfolio investors are already showing strong interest in the country's capital markets. A senior research head at Standard Chartered Bank stated that global investors are impressed by Sri Lanka's economic tightening measures, which are reflected in improved financial indicators. He noted that many investors are now holding overweight positions in Sri Lankan assets, signaling renewed trust. The bank's Sri Lanka CEO emphasized that attracting large-scale investments require policy stability, reduced turnaround times, and improvements in land access and capital availability. He highlighted the need for bigger investments, pointing out that the average FDI deal size in Sri Lanka is just $3 to $4 million, whereas the country should aim for transactions of at least $300 to $500 million to achieve significant growth. On trade, he noted that Sri Lanka ranks 34th in the US trade deficit basket and remains a cost-competitive manufacturing destination compared to regional peers like Vietnam and China. However, high para-tariffs continue to limit intermediate exports, an issue highlighted in recent international economic reports. Amid shifting global trade patterns, Sri Lanka is well positioned to benefit from increasing South-to-South trade. However, experts stress that long-term success hinges on consistent policies and structural reforms. Let's take a look at this week's Treasury bill auction results. In this week's Treasury bill auction, the 91-day T-bill rate stands at 7.52%, down by 1 basis point. The 182-day T-bill rate is at 7.86% and the 1-year T-bill rate is at 8.34%, with no change in basis points compared to last week. Thank you for watching. We'll be back next week.